Good afternoon, traders. Joseph here from Eightcap. Welcome to this week's Trade Zone weekly wrap. So we will really just fly through the big ticket items this week. So if you are enjoying our content, please feel free to subscribe. And we have a lot of fresh content and by different presenters, so there's always a bit of a different take on things. So feel free to subscribe if you do enjoy it. So this leads on from last week. So we saw that Silicon Valley and then Signature Bank fell into the frame after Silvergate. So Signature and Silicon Valley were taken over by the Fed. So what we hear is the deposits have been backed, and so that's good news. So both banks are now, basically have ceased. Now we had it turned into a contagion. There's some bank runs, and everything was really happening. So we saw as well that First Republic Bank also had some issues, but it has been saved so far by a joint group putting in funds to basically stabilize it. So that looks like it's okay at this point, and this really just led the whole week, didn't it? So we're just looking at the US 30 in front of us now. Obviously we know last week what happened, but this week was quite different. We had some real strong moves down that continued to be rejected, and we'll get into more of the price action soon. So basically that's just a sign of saviors coming in to help stabilize the situation, i.e. President Biden with an order putting in a backstop. And then we saw yesterday when things started to get really nasty with Credit Suisse, which it looked like it could have been the next real big key domino that could possibly fall. The morning was saying that the Saudis had stopped supporting, there would be no more funds, and they also commented that the whole reaction was overdone. But anyway, if you had your money in any of these entities, you'd be wanting to get your money out, wouldn't you, quick smart? So we also then heard news we heard news that a loan of over $50 billion had been brokered between the Swiss National Bank and through Credit Suisse, basically putting in a bit of a flaw and salvaging the situation. And this really did show up for risk markets. Now, yesterday was an interesting day as we were going through the European session. Wednesday, when we're going through the European session, we saw quite a nice move higher, and then things sort of just hit the wall, and we saw a lot of panic and a lot of worry, and this is really due to the Credit Suisse issue, and we saw markets absolutely tanking, and it looked like the possibility that we're going to see something that we hadn't really seen since 2020 when we saw that panic selling from COVID. Basically, that we did see a lot of money moving into the yen, and you can see really how badly, how much demand the yen saw, and we can just see there some of the market moves. So there was a real shift back to the yen, I think, and also it really shows the panic in the market at that time. Now the euro had a few other things going on as well. There's a lot of talk as well that due to Credit Suisse, we possibly weren't going to see an interest rate rise yesterday. Early this morning. Now that didn't materialize. The ECB, they stood firm with their plan, and they did raise rates by 0.5% as expected. But now there's still this continued talk now about whether central banks should continue to raise interest rates. Inflation's still high, so yes, they should. Is the banking sector really about to fall over? We don't really know just yet. There have been some banks that have been caught out, and there is information out there just exactly what happened at Silicon Valley, and due to their exposure and their risk management and how it unfolded when interest rates started to go up. Is there really someone to blame for the high inflation and interest rates going up? That's probably a whole different video, but the fact was that interest rates went up. Some of these banks were holding long-term bonds with very, very low rates, and as interest rates went up, the yields fell, and it started to cause issues for them. So Again, won't get too deep into that, but there's a bit more going on to this story than just central banks, totally causing damage and wrecking everything. So rates had to go up. Any economy with zero interest rates is, not showing the best signs of operation, in my opinion. And so yeah, with inflation, it's a normal to see interest rates go up. And whether that's led to other areas, who knows? But look, it's a turning point, a factor in the market that has to occur if certain circumstances are, in front. So, will we see a hold next week from the Fed? The general talk is that there will be 0.25% interest rate rise, but just quickly going back to Credit Suisse. So as we saw this bailout materialize, we've now started to see some recoveries from risk markets, and I suppose really the biggest turnaround we've seen so far has been with crypto, and we'll finish on crypto. And but we can see here stock indexes really start to see some glimmers of hope, and we saw some nice strong rallies yesterday. And even though the ECB did put up rates yesterday, we did see a return from buyers coming back into the market. So US 30 as well looks like it's put in a bit of a floor. There's a heap of demand down here. There's been 3 solid attempts to break it, and they've all failed so far. So could this be a short-term turning point? Have we sort of reached start to form a bit of a foundation, and are things going to start to get better? Hopefully they will, and hopefully we'll see demand start to stick, and we will see continued buyer confidence come back into the market. Now with the recent events, the Nasdaq has absolutely soared, and we've seen 3 days of very firm gains now. So there was that little pullback yesterday, but that was snapped back up, and we've seen strong moves higher here. The Nasdaq's very interesting, isn't it? So we've nearly gone all the way. We're not too far away from that 1270.04 area. That was the last point before we saw some of this eventuate. The S&P as well, not as healthy as the Nasdaq, but definitely pushing higher, and we've seen a lot of demand here. So there are some good little signs appearing now. The Aussie today is having a very strong day. That's despite continued talk around what the RBA's next move will do. I think the consensus is they might hold, but there was firmer employment data, so I think they'll be looking at the next 2 pieces or 3 pieces of key data before we get some certainty there. But if we did see a rate rise, it would most likely be 0.25%, and but that will come down to data, we believe. So there's not any real key. Well, there's not too much key news tonight. But it's really been all about this. I hate to say it, the word crisis, but the banking crisis has been occurring for the last 2 weeks now, and if we're going to see any more surprises with that, if markets are sort of starting to price it in now, and if actions that have been taken are now sort of gotten to a point where it's starting to induce confidence over red hot fear. We do have 1 o'clock tonight Australian Eastern Daylight Time. We have the prelim UOM consumer settlement that will be coming in. They're expecting 66.9. Now we just want to have a quick look out to next week. I think the key one that everyone is waiting for is the Fed, and that's coming out Thursday morning, and as stated, I think they're expecting a 0.25% increase. There has been some minor talk about a possible hold, but probably we'll look for the Fed to continue on, just depending on how much damage they actually do see that's been done or is currently still occurring in the banking sector. Now with the Fed as well, just moving back to last week, there was some data. Obviously we know we had CPI data and the PPI data in between all of this that's been going on. CPI came in as expected at 0.4, and we saw the year-on-year come in at 6%, which is expected, but core CPI increased to 0.5%. So PPI data as well came in as expected and slightly lower on the core, the PPI data came in slightly lower. Retail sales as well came in a bit mixed. So we had core retail sales at minus 0.1, and we have retail sales at minus 0.4, so just below the minus 0.3%. So there's a little bit of mixed signs. So that's why we will still see, with inflation still sitting at that 6% point. You might think that they'd still continue to raise rates, but it may also come down to some of the damage that's been done. But there's still 6% inflation. So if we did see a raise in rates next week from the Fed, I don't think it will be a massive, complete surprise. Now with some of the other markets, so oil's had a really interesting couple of days now. With all the drama that's been going on, it has also been pushing back into focus recession fears, demand fears, and that has led oil sharply lower, and we did see finally a breakout of this range, and it was to the downside. And sorry, I'll just zoom in. We've had a couple of attempts and fails by sellers to continue to push the market lower, and we saw a low at 65.66, which is quite a low price. So anything, it'd be interesting now moving forward to see if OPEC do start to make some comments, because price has been trading under $70. So it'd be interesting to see if we don't see a snapback back above 70, if we do see some comments out of OPEC around with the oil price being as low as it is right now. Now, gold, obviously, we know has been having some really solid moves. It's been one of the few real safe haven plays during this, and it still is sitting up above that 19,000 point. It's above 19 at the moment. Can't really see that grey bid point. So 1928 at the moment. So very healthy still. It has been ignoring the dollar to a degree, and there's been a real strong safe haven market of late, and even as through this week as well, is still seeing some gains. We haven't really retested that high yet, but still the market continues to push up. Now we want to just touch on cryptocurrencies. Cryptos have been having a fantastic day today, and it all really got going last week. So we'll just have a look at the weekly. On Saturday. So after we saw those dramatic falls, everything started to change. And as we saw more and more comments and news coming in with basically governments, banks, and good news about support and help, we've basically just seen, this absolute drive higher. So Bitcoin at one stage got back up to that 26,000 point. It was a few days ago, and at the moment we saw a bit of a buy here, and it's just cracked above that resistance here, and it continues to push higher. So it's clear that this key resistance that we've been watching here at the 24 area, and this is continuing to push up today. So very good signs there from crypto, as it sees a bit more confidence in the market now and continues to push on. That's even though there was some news saying that some of the stipulations were that the crypto business would have to finish in some of the banks. I can't remember the one at the moment, but there was some news that they would have to drop their crypto business. It doesn't look to have phased the market, so everything's sort of pushing on today, and we can see 4.65% for Bitcoin. Ethereum is still struggling around this area. We had that test earlier, but it is up 3% today, and some other coins have been dragging a bit. Bitcoin's sort of leading a bit of the charge. So for instance, if we look at Cardano, it's higher and pushing higher, but it's definitely nowhere near some of those previous highs like Bitcoin is at the moment. So onwards to really onwards to next week now. I think the Fed meeting is going to be the key one that people will be taking a look at. Obviously, this banking, the issues in the banking sector, not only in the US but globally. I should say Europe. They will remain a key focus next week, as we see sort of the aftermath, any other players that are caught up in it, any other issues that emerge, and how things pan out with Credit Suisse. They do have that loan, but will there be any sort of new surprises coming out from that area as well? And just some of the other things to have a look at. So Canadian CPI coming out, UK CPI. The last data was 10.1%, and apart from the Fed, we have the Swiss interest rate decision coming out, and we have the UK interest rate decision coming out. So there'll be a few things to get the market going next week. You know, not ignoring, but on the other, you know, apart from the current driver, which has been the banking issues. So it should be another, should hopefully be another exciting week with plenty of volatility, which is what really helps traders. Normally, you really don't want a couple of flat weeks, do you? You want the market to be moving and to be pushing around to create some opportunities as well. I know I do, so hopefully, I'm sure most traders do want that as well. So that's it for today's update. So thank you very much for your time. Wish you all the best for your weekend. Good trading for the rest of today. Thanks again. Good trading and bye for now.